You're watching Closing Trades right here on ET now. We're holding out quite okay. We're back at the 26,000 mark, at least for the Nifty futures. 131 points higher. Max Healthcare, HCL Technologies, Infosys, Wipro, TCS, it's IT all the way. That's the one which is taking the markets higher. Some of the new age names as well are looking quite okay. So they are also making their due contribution. Other than that, there's a Sun Pharma, Unilever, select buying in a select few stocks. And of course, SBI, which is holding up a good 1% as we speak right now. But it's good to see that that global market weakness, we've managed to evade it so far at least. But let's chat a little bit more about markets and what one should be doing. Sunil Subramaniam joins in on the show right now. Sunil, hi, afternoon. A little bit of a shaky ground when it comes to the US tech stocks. So far, we've managed to escape the weakness. But do you think the US tech weakness is going to persist? And then will it rub off on us?
But interesting that you're asking the question when US tech is weakening and Indian tech is strengthening, because when US tech was strengthening and Indian tech was weakening, nobody asked, right? So as you know, our tech has been the worst performer over the last 1 year. So I think basically this is about the fact that our IT services are in the real actual domain, and AI is a part of the new industrial revolution. So it is going to be of a promise and then a catch up to the promise. There will always be disappointments. There will always be over anticipation about the future in AI. And so I think that the US tech is prepared for a volatile ride, right? The future is bright for AI, and that's why the tech was running up. But as you know, the markets sometimes overreach themselves. I think that's what's happened over the last few months. And this is a bit of healthy correction. But over a medium term, I still see that AI is a good, solid foundation. And surprise, surprise, Indian tech companies, I expect them to adapt to the new AI journey and hence come out as winners over the medium term.
Okay, great. So that's the take with regard to IT. We've done quite a bit with regard to IT, but talk to us about the financials, Sunil. Not seeing them perform materially, especially the private sector banks. They've lagged. What next for that story?
Well, the reason for that is that a lot of it is in the price. If you know that it's the banking sector which DIIs have been supporting all the period when FIIs have been selling. And what's happened is that FIIs, when they sell, and especially a passive fund sells, 30-35% of that is the banking space, right? Now, DIIs, when they buy, they've had a choice between a much more value public sector bank versus a private sector bank, which is probably priced to perfection. So when I say price to perfection, which means there's no margin of safety there. So a little bit of bad news, little bit that the growth is slipping, it means that they are always in a 10 side. Whereas in the public sector bank, on a price to book, they are still much, much cheaper. And the future looks good for them for 2-3 reasons. One, government is solidly backing reforms in the public sector. And because of which you're going to see the capital limit go up to 49%. You're going to see good solid mergers of good quality banks in the PSU come back and come up in the global rankings. You're going to see them access international capital more because of that. And when the private capex journey, which already the green shoots are visible, when that picks up momentum, you will see that it's the SME, MSME which has to execute that expansion order. And it's the PSU banks which are ideally positioned to lend to that segment. The private sector's experience at lending to MSME has not been great. So they are seeing that there is a little bit of NPA pressure there, especially in the NBFCs who have ventured there. But public sector banks know that space well and know how to ride that space. So I think that the attention is on the public sector banks, and that's why private sector banks are suffering in relation, I would say. Otherwise, in the immediate future, I expect the lending growth. The numbers that I saw are picking up. There's double-digit credit growth happening, and their numbers should be decent. But just like I said, they are priced perfection, hence the margin for error is very less.
Conversation with Sunil Subramaniam, and let's just take stock of what's happening in the market. While IT, of course, is rebounding nicely, banks all the way, which are also giving that due leg up to the indexes. So banks. And of course, you know, other than that, you've got a Max Healthcare, which is holding out well. There's Nestle, there's Titan, ONGC is holding up higher, iShares, M&M, ICICI Bank are where you're seeing some material moves come by. On the weakening side, though, you've got a Tata Motors passenger vehicles, you've got Maruti, Bajaj Finance and Hindalco, which are the ones which are under pressure. Sunil, what's the call now on the PV segment of the market? While M&M, of course, is dominating, but M&M, of course, has other businesses as well in the listed entity. But pure play passenger vehicles, what's the call?
No, I think that they've seen a good leg up in the festival season. Now there will be a bit of a lull, but again in Feb, March, the depreciation aspect will lead to a boost in sales. And normally, historically, March and then the first 2 weeks of April, do invoicing for March itself are very strong ones for the passenger vehicles. So I think that any temporary lull could be a good time to accumulate because the whole GST rate cut thing will play through the whole of next first half of next year too.
Your biggest beneficiaries of that rate cut, how would you play it?
Well, the best way to play it, I mean, if you look at it, is the mass market because I think the GST is going to make the biggest difference because the biggest drop in GST has happened in those vehicles, right? Because the higher vehicles are treated as sin goods and the GST rates remains high. But that doesn't mean that there'll be a fall in those sales. But incrementally, if you see, it's the entry level cars which have suffered over a period of time because of the K-shaped recovery in the auto segment along with other consumption. So I think the bounce back will be the biggest. I would still bet on the entry level space of the cars up to, let's say, 7-8 lakh rupees as the biggest driver of growth for the PV segment.
Just to know, where within pharma are you scouting for fresh opportunities, if at all? Or where is it that you have your overweights?
So I would say it's a barbell strategy. So one side of the bar is domestic healthcare, hospitals, and diagnostics and the like, where there's a good growth path, good earnings growth, and a stable business model, which is ever rising. Okay. But on the other side, as a contra bet, is the export-oriented pharma, the non-generics, because the generics are by and large chipping along, but the CDMO pieces and the product pieces, right? There, because this whole tariff overhang is still there on that export-oriented sector. So it's a risky call, but I think that balancing the, that's why I call it barbell approach, is an allocation, I would say, between 65% into the domestics and 35% into the export-oriented pharma.
And Sunil, within auto, do you have a preference? Four-wheeler, which is passenger vehicle, would you like CV more? Would you tilt towards CV with rural probably coming back? Or would entry-level two-wheeler be the way you'd play this?
So I will play two things here. One is definitely the entry-level two-wheeler because I see the rural demand translating there. But apart from that, my focus will be on CV because I see private capex starting its journey to recovery, and it's a long-term journey. And commercial vehicles are a key part across LCVs, HCVs, MHCVs. All of them are needed for transportation and logistics, which will tailwind ride on the capex recover. So for me, the CV space from a medium-term outlook looks like a very good bet at this time.
All right. One of the star performers, Sunil, has been a Shriram Finance. It's done ever so well over the last 3 to 6 months. Is this something which is on your radar? They've been very, very consistent with their ROAs. 2.8 to 3% odd is what they've done over the last 5 quarters in terms of ROA. Does it currently, given or post this rally, does it look attractive to you?
See, to me, I generally don't talk stock specific, but especially for me, CV comes with the CV financials in tow. So obviously for me, if I'm bullish on CV, then every CV financier is because 99% of the vehicles in the CV segment are financed. And in this kind of a journey on the private capex, you'll see a good second-hand trade. So lenders who are focusing on financing second-hand commercial vehicles are obviously also have very good healthy margins. So broadly, like I said, along with CV, I'm positive with all the CV financiers also.
Sunil, what about the capital markets theme? I was just looking at BSE. It's hit a 5-month high. Volatile as it may be, this is, of course, a structural story, and who would know better than you? But where within the capital market theme do you still find opportunities and value on the table?
So for me, asset management companies, they've done well. but I see that's the way of the future because I see a lot more new asset management companies coming into listing space. When a new listing comes in, it takes the whole sector up generally. And I think there are two or three. There's IPRU, and then there's SBI, the asset management arm, which is likely to list. So I see asset management as a big, big play. That's number one. Second to me are wealth managers, the distribution and the wealth management companies, because I see the whole income tax cut, GST cut also playing its part on the savings field, and the penetration of mutual funds is largely driven by these distribution companies and the broking houses. So I would say that those are the two sweet spots. Insurance, I'll wait and see. I just heard the LIC chairman speak, but I'd like to know whether that input tax credit, how is it really going to play out? Because only a strong market expansion can cover for that input tax credit loss. So whether that's going to happen immediately or will take some time, I'll wait and watch on the insurance side. But apart from that, on this thing, I'm bullish. Like I said, asset management, broking and wealth management, and the capital market infrastructure companies.
The next mega event is 2.5 months away, and it's the budget. It's the union budget. How should one gear up for that? Because, in a month or so from now, conversation as well as stocks will start tilting towards those budget-related themes. So try to gear up for that.
So for me, I think the announcement of a big few PSU bank mergers should be the highlight of this budget, because financing for the country is big need, and PSU banks, I think, on the government's radar. Noises are coming on that. So I expect that the budget will be dominated by announcement of few big PSU bank mergers. That's number one. Number two is the balance between infra and giveaways. We do have some recent elections coming up in the coming years, and so the government has to do a balancing act between sustaining the infra. So I don't see the infra getting expanded, but there would be a lot of directed, I would say, developmental populism as a focus of the budget, which is not a bad thing, though from a fiscal perspective, it doesn't look as great as saying I'll spend more money on capex. But the fact is the government has realized through multiple budgets that you have to put money in the hands of the people. So I think that some more rationalization on the tax front and putting money in people's hand, but in a way that will support development. That's the balancing act the finance minister will do, and I'm eagerly watching for that in terms of how do they actually transfer money onto the middle class and the spending population through the budget in a way. So I think those are the two key things for me to look out for. PSU mergers as well as and the other part recently a colleague mentioned in terms of the InvITs coming through. So I think that getting the private sector to participate in the government capex through the PPP model will also be a big initiative the government will do, because they don't want to let the ball off on capex, but their hands are tied because of the GST cut, the revenues and all could take some time to pick back up. So I think they will also focus on the PPP model. And along with that, sorry to add one more point, I think that the PLI scheme has got to be modified in the context of the tariff and the other pressures that the sector are facing. Manufacturing, to boost private sector manufacturing in India, the PLI has only been partially successful in, let's say, the EMS space and all of that. But they have to widen it and get this whole Atmanirbhar, Make in India concept also a great big push. And so that's the fourth pillar on the budget that I expect the budget to get some clarity and direction on.
Right, indeed. Okay, let's address some other piece of news. We'll let Sunil Subramaniam go. Thank you so much, Sunil, for taking the time out and speaking with us as always. But I'm going to hand it over to